So
yeah. No, they
just,
always say, like, I've heard this or I've heard that. And I'm like, oh, you just have to go talk to this person. And she'll really answer all your questions. Because it's hard. It's hard for us to answer questions because we don't, like you said, everybody's different. So we really don't know until they talk to you or a local lender.
Yeah, but it's same with you. I mean, if a buyer's buying a house, not everybody wants a pool, but some people do. Not everybody wants 5 bedrooms, but some people do. So everybody has a different one. Some people want some country life. Some people want more in a neighborhood. Some people want to be in a 55 and older, so they have a community around them. Everybody's different in their wants and needs for buying a house, and in that same way, everybody has a different subset of qualifications that's going to work for them.
It's cool because I love working with. That's a favorite part of my job is like how everybody's different. And sometimes I learn a little bit. And one of the things was I had a client who, she called me and she was like, you know what? Time is money.
Yeah.
And we're in a stage of our lives where we don't have time to do the lawn or we don't have time to take care of yard or like, you know, that's for later in life. Right now, I want an easy to maintain house where I can have time to spend with my baby rather than spending time outside.
Yes.
Working on the yard.
Exactly.
So I'm like,
so we go through different points of life too, where people, if you want to call it your seasons of your life. And sometimes seasons require and want bigger space, and sometimes you want something smaller with a community around you, and sometimes, it just depends. Everybody's got different wants at different points of their life.
Yeah, and it's good to know, like, this isn't the end for us. It's like, okay, this is just a step.
Yes.
But then it's like 5 years from now, we can have that yard that we want. Like, we don't have to think about the end goal right now.
Yes.
That's where we mess up. Yeah. We're just like, I want this now. But it's like, come on.
Baby steps.
Yeah, baby steps. You're only like 21. You're good. Hold on there.
Yeah.
Anyway, my niece, this is funny because my niece is, she's 13.
Yeah.
And she made me listen to this song the other day. And I'm like, I can't believe you're into it. When's the last time you heard this song?
That's a good one.
It's like not even her generation. She's like, can you play Genie in a Bottle? And I'm like, what? You want me to play Genie in a Bottle?
I love it.
So every morning when we go to school now, this is our song.
That's awesome.
If you wanna get with me.
I love it.
I'm like, yeah, she's so cute getting into these songs now. Which is better than the other songs she's been listening to. I'm like, what are these songs? But this is like when I grew up.
Yeah.
This was what I was listening to. It's a good song. Ooh. What song do you listen to on your way to?
You know what? I'm going to be honest with you. I keep my head clear, so I don't hardly ever turn on the radio or Spotify or whatever. My husband is constant, always something going on, always, no matter what. Even if TV's on, he's got music going on. So he has that head, and my head is so busy all day that I like to just be quiet.
And just like listen to your...
Just silence.
See, I need to have music all the time or a TV or something. Yeah. Like even at night, what bugs me is like the glare of the TV, but I can fall asleep to the noise. Yeah. No big deal. Yeah.
Yes. That's a good one. Let's use that.
Right? Okay, Zoe. Thank you so much for joining me on the Valeria Genoves Show. Would you please give us a quick introduction and let us kind of know about your job?
Sure, yeah. My name is Zoe Raithel. I am with Certainty Home Lending, and I have been a mortgage advisor for a little over 20 years now. So I've been around for a while, always here in the Paso Robles area. North County is where I specialize. And really, I just help people achieve their goals with purchasing homes or refinancing their homes and making sure that they have the best, I guess I'm going to call it experience possible, because in our world, especially today with all the technology and online and AI, a lot of that human kind of touch has been taken away from a lot of transactions. And so for me, that's why I like having an office in Paso. People can come in, we can sit down together, have conversations, have a cup of coffee, and just be able to make sure that I completely understand everyone's goals and we walk down the path together. So I kind of sometimes call myself a guide because I'm helping them down the path to make sure that we're kicking the rocks out of the way, making sure they're not stumbling, and maybe just helping them along their way to get where they want to go.
Yeah, I mean, I think not everyone, but a lot of people get so scared of just talking to a lender and just maybe knowing where their finances are.
Yeah.
That they want to make that their last, or, at the end. And it's actually, we were talking about this yesterday. This is actually the first step to becoming a homeowner or purchasing your house, is talking to a local lender.
Yeah. I mean, I like to say that that's absolutely true. And here's the reason why. It's hard to go out and start looking at homes if you don't know if it's going to be in your buying power or not. And a lot of people have fears of whether it's their credit score or some debts or the way that their income is represented on their tax returns. A lot of people have been either have had a bad experience or they're just imagining the worst. Yeah. And that's not often the case. If you sit down with somebody and we talk about it together, there's so many different ways now to be able to purchase a home, that what happens is when we start the process of buying a home at the pre-approval stage, that can give you so much clarity. And that's, certainty. That's where I work, certainty home lending, so that you feel comfortable that, hey, this is in our buying power. We can do this. We've been pre-approved. Mm-hmm. So it's for the buyer mainly, so you feel comfortable with moving forward and looking at the right homes that are going to meet your needs. But it is also, when you find that right home, super important to already be pre-approved, because then the seller knows that you're serious. The seller's agent knows that you're working with a reliable person here locally. So if we're writing a pre-approval letter, that means you've already had all your income already confirmed, validated, your assets, so your credit. We've already looked at all of that. So if you have a pre-approval letter from me here locally, that will help you to feel that you're not only confident in buying, but your seller and your seller's agent are confident in your offer.
Yeah, and I think not a lot of people know this, but for when we send out an offer, we mm-hmm. have to send out your pre-approval letter, a lender's pre-approval letter, or else it's like, I don't even know if you're serious.
Right. Well, within the contract itself, when you put the offer together, there's a section on there, correct me if I'm wrong, where they have to you have to say you've been pre-qualified, or pre-approved or fully underwritten. And so those are important boxes that you want to be able to check the best box. If you're putting in that offer, you want to say, I'm fully pre-approved, because then the seller knows, their financing is already confirmed. That is something we don't have to worry about when we accept your offer.
Yes. And going back to local, because I keep saying local lender, because like me, as if I were the selling agent, let's say I have 3 offers. And let's say one's from your local Zoe. I know Zoe. I've worked with Zoe before. And then one's from like Wells Fargo lender. And I'm like, I'm never going to be able to get a hold of this guy. And then we have one out of like, I don't know, Bakersfield. And then I'm like, I don't even, I've actually had a bad experience working with a different lender out in Bakersfield. And so I'm like, okay, who am I going to really want to, Trust. It's the trust, right? So it's like, okay, so it's very important to when you're looking for a lender, to have a local lender who's always available to pick up the phone. Also, like when we run into conflicts, knowing that you're going to probably have solutions for conflict, because we never know what's going to happen in the middle of the transaction. Yeah. So that's really important. And I've done it myself where we had a non-local lender, and so one of our counter offers is we would like for you to use the local lender, just to make sure if a problem arises, we're able to get a hold of the lender.
Yeah, I mean, it's communication for sure, and I'm local, I live local, so easy to I'm available quite often. So that's important to have your go-to person that you can call and ask questions, get answers. Conflict solutions. What are we going to do? But the other part really that's super important is that you are working with someone that is experienced and is writing a good pre-approval letter. Yes. So I have seen, unfortunately, some buyers come to me in a panic because they're already in a contract, and 2 weeks into the contract, their lender has told them, I'm sorry, you're not actually really approved. Yes. Because they did not look at everything from the beginning, the income, the assets, the credit. And so not all pre-approvals are equal. And so it's really important to work with somebody that you know, like, and trust. And if you don't have somebody in your court already, then you work with people like Val that know people that do a good job. So that's super important.
That's happened to me twice.
Yeah.
Twice where I'm
Scary,
like,
yeah.
oh my goodness, we have to switch lenders right now. And it sucks because at that time we already invested time, but not only like money and inspections.
Yeah.
Like you've already invested the money in inspections. So now it's like we have to either find you a new lender that they can resolve this issue, or we're just, we resolved it twice. It happened to me twice and we ended up resolving it. And I'm like, thank God. But it's because we end up switching to lenders that are very experienced. So they're like, okay, this is actually how we have to, you get creative.
Yeah, we get creative. We restructure. We come up with a different loan program. There's a variety of ways to re-look at a file where we could still make it work.
Yeah.
But super important to know up front, that's best case scenario, that this is what it's going to look like. This is my rate. These are my fees. This is my monthly payment. And I know I'm going to be able to buy that home because we're working with somebody that knows what they're doing.
Yes, and very straightforward, right? Like you said, this is around how much you're going to pay every month if you choose to buy a $750, home. You said you had an experience, a bad experience with your lender 20 years ago, right?
Yeah, that's actually how I ended up getting into the business. It's kind of weird this way, but I mean, I will say that the first time I ever bought a home, we were in our 20s. My husband were kind of pretty newly married, and he came home from a chiropractor's appointment and said, Dr. Dean wants us to buy his condo. And I'm like, what? We were not ready. It was no more on my radar at that time to buy a house. But whatever, long story short on that, we connected with a lender who was amazing, amazing. I mean, he was my therapist, my priest, my everything. I mean, I was crying half the time and I wasn't ready, and we had to do and he got creative and found ways. And anyways, bottom line is we got into that home and we've been homeowners ever since. So it's just getting in, right? Yes. And unfortunately, though, that experience was unique because then when we bought a new house, sold and bought, or we refinanced, or we moved here, we moved back to the Central Coast in 1999 to raise our girls. We have 3 daughters, and we had sold our house. We were living in the Bay Area and already coming here. And I had 3 young babies at that time. I literally a 3-month-old, a 2.5-year-old, and a 5-year-old, so young. And we had already sold. We had our house. Our house was in a moving van. We were coming. Yeah. And my lender here, we were buying in Paso at the time in '99, and he just went MIA. Like literally, we are homeless if we can't find the guy. And it was very, very stressful. And I never knew what my rate was, if we were locked, what the loan document, nothing. Like literally
no
the guy
communication.
None.
And you were about to close.
Yes, we were already sold on our other house and we were coming. Like our moving van is on its way.
Oh my goodness.
And we just had, obviously assumed that the loan documents would be here and we'd be, whatever. As it turns out, that particular guy was on a bender in Vegas. And I was like, now I will say, many of the bad players in lending have gone away, so don't be too afraid about that story. But it did bring me to the field of lending because that wasn't the only time that I didn't have a great experience. And I'll be honest, here on the Central Coast. And so after a couple of times of that, a number of people had approached me in the past saying, you'd be really good at that business. And I'm like, I don't know. I've got kids. How much time does it take and all that? You have to be licensed and all the things. And but then finally I had an opportunity to jump in. And my whole business model has been this, way for more than 20 years now, that good people deserve great experience and great service and great advice. And a lot of my clients just come to me, even though we've already closed on what do you think about this? How can we do that? I don't know everything about everything. I'll be the first to say that. But if I don't know, or I don't have a specific opinion based on fact, then at least I can refer them to somebody that can, help them in that topic, whatever it might be. Yeah. So that was my experience. I just had some poor experience with lending, and it made me see the opportunity and really the need for, and we talked about this, there's a lot of people in our area that just need that extra assistance.
Yes.
And it might be first-time home buyers. It takes more time with first-time home buyers, and there's a lot of education. I come from I don't know if you want to call it a mother's heart or whatever, so I actually enjoy working with first-time home buyers and spending that time. Or seniors, the other end of the spectrum, where, they feel like maybe the technology is not their best friend. They don't necessarily want to do everything online, and they just really want to come in and like I said, do the old school, the paperwork.
Yeah,
so,
no DocuSigns, like physically sign the paper.
Physically sign 500 pages.
Yeah.
And sometimes I make a joke. I'm like, make sure you take your arthritis medicine before you come on in. But that is, my bad experience really propelled me into creating a platform for myself and for my clients that is just, we're not going to do that. We're going to do something better, and we're going to make sure that everybody has a great experience.
Yes, not like making them feel comfortable, where to that being your first step, it's okay to come in and sit down with you. Like,
that is one of my...
It's not that scary.
It's not. I promise. It doesn't hurt at all. In fact, one of my, things that I pride myself on is I call it, A++ service. So, but my first A is that I'm approachable. And I really, honestly, I kind of liken it sometimes to, okay, I'm the doctor. I've seen it all. Don't worry about it. It's no big deal. And just be, approachable in that sense that I don't come to the table with any kind of judgment. Like, people have stories, whether you're good to go now, or I've worked with people for 2 years to get them ready to buy. So it doesn't mean that just because you've had a lot of people in a lifetime have detours in the road. They were going along just fine, and then something happened. Sometimes it's medical, sometimes it's a divorce, sometimes it's, their parents are, having a hard time, whatever. People have detours, and sometimes your life story is not a perfect, beautiful straight line.
Yes.
And so a lot of people feel uncomfortable about sharing that, or again, like going to the doctor and, pulling down the pants, whatever, they don't want to show. But the reality is many people have that kind of challenge in their life, and they need to feel okay that this happened. This is what was going on at that time. Here's where I am today. How do we go forward? And so that's what I do about being approachable. I just say, hey, let's just do it and let's pull the Band-Aid off and move forward.
And then take it one by one.
One step at a time. You're either ready today. Funny enough, so many people that come to me and say, I don't know, they're so scared. And then I'm like, okay, let's rip the Band-Aid off. And I'm like, okay, here's your pre-approval. Go contact Val. We're ready to go. And they're like, what? We're ready now? And I'm like, yeah. You can buy now. So not a lot of people feel like they've got multiple steps, and many times it's not. It's just the fear.
Yes.
And if you just jump in, I will tell you, you're ready now. You're not ready now. Maybe in 6 months, here's the three steps we're going to do to get there. Or like I said, 2 years, whatever. The bottom line is home ownership is just such a valuable asset to you now and going forward in your life that you just have to find a way to get in. And sometimes it's now and sometimes it's a little bit later. But if you're on a path, I can help you get there for sure.
Yeah. Yeah. See you guys. Thank you, Zoe. Let them know, because I'm like, come on, it's going to be okay.
It's going to be okay. I promise.
Also, there's a few cool, but like good loans out there that I feel like people should know about. And I'm actually working with one right now, and it's called Cal Hafa.
Yes.
And it's actually my first time working with this kind of loan. And it's also the seller's agent, the seller on the selling side. Sorry, it's a little tongue twister there. It's their first time too. So if you want to give us some information on Cal Hafa, that'd be awesome.
So we in our world we call it Cal Hafa, but it stands for California Housing Finance Agency, so HFA. And you can actually, as a consumer, go online and just Google Cal Hafa, CAL HFA, and there's a great website there to get some more information. But generally, how people use Cal Hafa, and I can help them with this, is with down payment assistance. And so the state of California sets aside budget monies to help with down payment as well as closing cost assistance. So that's one of the biggest barriers really to purchasing these days is, well, I can afford the monthly payment and my credit's okay, but I don't have the down payment to get in. And so even first-time homebuyer programs, 3% down, or FHA allows for 3.5% down. Those are small down payments, but even 3%, think of it, in our area, a starter home might be $500,000 or $600,000.
Yeah.
So if you're at $500,000, 3%, that's $15,000 that you have to come up with the down payment. Then on top of that, you would have closing costs, and so someone might need $20,000 to $25,000. That's hard to come by, and it's hard to save. If you're paying rent, how are you saving that much money, right? Sometimes there's family members that can help with a gift, and that is helpful as well. But a lot of times it's just, I'm ready to buy, I can afford the payment, I qualify, I just can't get those funds. And I won't ever, because of the economics of paying rent and nobody in your family being able to gift you. So the way that you can do that is work with a preferred lender. There's a you can on I am one, but at CalHFA you can see preferred lenders. There's certain ones that are already approved to do these types of programs, and so I can go to CalHFA for you and get you that 3% that you need. And a lot of times it depends on a variety of factors, but most of the time you will pay it back when you sell the house in the future. So that's the main ones that we've worked with for many, many years, CalHFA, down payment assistance. What you might see and have seen in the last couple of years, and you'll see more of because it's opening again in January, and that is the CalHFA Dream for All program. And what the Dream for All program is, it's the same thing. It's down payment assistance, but it's 20%. So significantly more. And so for an example, if you were buying that same $500,000 house and you won a voucher, and I'll talk about that in a minute, for Dream for All, then you would get 20% of $500,000, you would get $100,000 from the program to help you. So how does that help? Well, now your loan amount is much less, your first loan, and so your payment is more affordable, and it's a great way to get in for sure. And the challenge, though, when we talked about this a little bit, is that there's always, of course, limited funds. I think the earmark for next year, 2026, is $300,000 for funds for this program. The last time that it rolled out the voucher program, there was 18,000 entries. So 18,000 people in the state of California tried to get the assistance, this assistance, Dream for All. And out of the 18,000, 1,700 won. So it's a lottery. Okay. So, it's a little less than 10%, but that's,
you never know.
It's better odds than winning the lottery.
I mean, didn't we have somebody just win the lottery in San Luis Obispo?
Oh, did we? I don't know.
I think so. Yeah. So it's like, hey,
it's
possible.
Could be you. It could be you. Yes. You can't win if you don't play.
Right, exactly.
So the Dream for All program is for that particular one, the 20% down, is for first-time home buyers. And those first-time home buyers, at least one person has to be a first-generation home buyer. So that means neither of your parents could have ever owned a home.
Okay.
So it's designated to help first generation get into home ownership. But I mean, the bottom line is lots of programs through CalHFA to help. The ones you've heard most recently is that Dream for All. Small window, but possible. Or if not that, then the other loan programs that are down payment assistance at 3%. You can sometimes go as much as 5% to help you a little with the closing costs. So either one of those are great options. There's other down payment assistance in the state of California as well through what's called Golden State Finance Authority, GSFA. So I can help with all of those things. And the main idea is, again, what you said, just start somewhere. Start with me, Zoe, at Certainty. Let's just sit down and talk about it. Can we get a gift? Can you save the money? Is there? No? Then let's go to these other loan programs that allow you to get in.
Yeah. Going back to CalHFA and the Dream for All, What is the minimum credit score that you would have to
For that
have?
particular program, it's 680.
680.
Yeah.
Okay.
Yeah. So that's another reason to start early. What if you're at 660 and there's just a couple of little things on your credit report that we can, fluff up a little bit? Maybe I can show you if you paid off a little debt that you'd be able to be at the 680. Maybe there's something that's old and not true anymore about your credit. So, different things. Sometimes there's ideas that we have that can get you to 680 in a very short period of time. And so since the opening, at least for the Dream for All, is starting in January, a good time to kind of start working on that is now.
It's like today.
Yeah.
Like right now.
Yeah.
Yes, because just in case you do need to maybe get your credit up a little bit. And if not, then you're prepared.
Yes, exactly right.
Yeah. Instead of waiting last minute.
Exactly
or
right.
missing the chance.
Yes, because the windows open and then they close pretty quick.
Yes.
So what happened this last time is I want to say the window opened and they had already met enough qualifying applicants and used up all the money. I want to say it was only in like 2 or 3 weeks.
Oh,
it was
wow.
short. Like, that's how fast it comes.
Yeah.
So you got to be prepared and ready to submit your request really when it opens. Mm-hmm. And if you're not prepared yet because you don't have paperwork yet or your income documentation, because I have part of the application process is me as a lender writing that pre-approval letter and saying, yes, if they get the voucher, if they win, they are approved for a loan. Mm-hmm. So I need information from you as well to be able to write that letter.
Yeah.
So it's a couple of steps. Not going to say it takes forever, but it definitely could take 1 week or more. So you want to be on top of it.
And then even if they miss that chance and you do have that opportunity to do the CalHFA, which is a 3% down payment assistance. So you have that option as well.
Absolutely.
Yeah. So that's perfect for our first time home buyers.
Yep.
Now, I know there's another thing we can do for self-employed. Like me, so for as realtors, we write off a lot
Yes.
right? Food, lunches,
mileage,
whatever
car,
we can,
postage,
yes.
parties.
Yes. Anything we can, we'll write it off. And I know like my parents own a business. So our W-2s don't come, it doesn't come out how we want it. So I know you have a different program for self-employed.
Yeah, absolutely. So I work with a lot. I mean, in our area, let's just face it, to be able to afford to live here, a lot of people are self-employed. That's how we make a living around here. There's not a lot of W-2 pay stub jobs that make enough money around here. So there's self-employment is pretty common in our area. And so traditionally at banks and even at mortgage brokers in the past, we've looked at income exclusively for qualifying exclusively by looking at tax returns. And so when you look at your tax returns, as you mentioned, there's often for self-employed and people, a lot of expenses that are written off. I mean, honestly, one of the benefits of being self-employed is that you can write off a lot of your expenses and lower your tax burden. So what happens if you make this much money, it says your gross receipts, but then the lender's using the net. That's the one at the bottom after everything. So then you don't make enough money to qualify. So that's a problem, right? But luckily, lenders have identified that just because your tax returns say this, that doesn't mean you're a bad risk necessarily to paying the loan back. What other ways could we look at your income to see the true, receipts coming in that would allow you to make your monthly payment? That's what we need to do. We need to be able to say, can you make your monthly payment every month, right? As well as any other debts you have. So what we can do now, variety of ways, but the one that's been really successful for me is utilizing bank statements. So if someone has a business, I was chatting with this gentleman. This is the second time I've worked with him this year. He owns a business, multiple storefronts in San Luis Obispo area. And he went to his business banker and he was looking to purchase his primary residence. And he wanted to live in the Los Osos area on Scenic Coast, Morro Bay, that kind of thing. So, and he's a family man and has, kids. So he needed, a family home. So it was going to be I don't know, 1.5 or 1.6 million. That's what it is around here.
Yeah.
And he felt like he could, afford the monthly payment personally, but his business banker told him he qualified for a $600,000 purchase. And that was it. And so he's not going to find the house that he wants in Morba. So he was referred to me by his agent and said, hey, is there any way we can get this guy's qualifying up? And so what I did was I worked with him to get 12 months business bank statements from his businesses. And what we can do is, instead of looking at his tax returns, we don't even look at his tax returns. We looked at what is the deposits that are coming in. What are the deposits coming in every month? And we do that on an average over 12 months. Mm-hmm. Now, we do apply an expense ratio, so it's not just everything in gets counted.
Okay.
But in his case, he was able to buy that $1.6 million house with a bank statement loan. I helped it, and we closed on it in the summer. So that's the huge opportunity there, to work with a lender that knows how to look at your finances. Mm-hmm. And the good news there is bank statement loans are actually not that much of a higher rate than a traditional fully documented loan. Okay. So it used to be, well, we always want to go to fully documented because that's going to be such a better rate for our clients. But it's not even that true that much anymore. They're really close, the rates. So if you can't buy with fully documenting with your tax returns, absolutely ask me or someone, hey, is there another way to look at my income through bank statement deposits? What would that look like for qualifying? What would that rate be? And at least And in this case, his rate was very similar. So it was not even a decision. He's like, oh, I can buy that family home. Let's do it.
Yeah. So that's good to know, because if you go a different route, like a conventional FHA, it's 2 years of W-2s, correct?
Yes.
But this one's like, let's say you just started your business a year ago.
Well, no.
Oh.
Yeah. You have to be careful. Yeah.
Okay.
So self-employed, I could use 12 months bank statements.
Okay.
But you really need to be self-employed for 2 years.
Okay.
There's a few little windows there, but I don't want to promise that to be anything other than what I just said.
Okay.
2 years self-employed.
So 2 years. See, that's good to know.
But here's the other thing that's cool. Like, what if someone started, I had this too. Someone started their business at the end of 2023. So they've been in 2 years.
Okay.
Because we're at the end of 2025.
Yes.
Okay. But 2024 was their first full year in business. Mm-hmm. They didn't make that much money their first full year. But 2025 is their second year in business this year. And now I can look at all these 12 months of bank statements and show, oh, they've been in business for 2 years. Mm-hmm. And then that also means I can use this year's deposit base, which was awesome. So now all of a sudden they qualify. So, there's lots of ways to look at that 2 year period, as long as you can show that you've either had a business license or you've filed your tax return or something showing that you've been in business for 2 years.
Okay. So have to be in business for 2 years,
yes,
but can go off the last 12 months bank statement. Okay.
Exactly right.
Okay, sweet. That's good to know.
It's really good. It's come in handy.
Yes. Yeah. Okay. So that's, there's no excuse there, guys. The other thing I wanted to talk about that I just found out when you and I sat down.
Yeah.
And that was reverse mortgages.
Yes.
Right?
Reverse mortgages.
Tell me more about that one, because the first time I've even heard of it.
Really?
Yeah.
Yeah. So a reverse mortgage, I will say right away that a lot of people out in the world have an immediate negative reaction to the word reverse mortgage. And it's kind of a bummer because they've changed so much in the last even 5 to 10 years, but definitely over the last 20 years. So what do I mean by that? So so let me tell you what it is first, mm-hmm. and then I'll tell you why it has a bad rap and why it's, kind of softened quite a bit. Okay. So what a reverse mortgage is, it's for seniors 55 and older that have a lot of equity in their home, and they want to tap that equity to either variety of things, help them with their expenses, because it's expensive today. It doesn't matter whether you live on the Central Coast or not. Social Security doesn't take you too far anymore, right? So you want to tap that equity, but you don't want another debt. You don't want to say, oh, let's get some cash out, but now you have a new payment. Mm-hmm. What if I got a home equity line of credit? Then you have a new payment. And then that doesn't a lot of times solve the problem, because now you have more debt, right? That you have to pay every month.
Yes.
Okay. So what about if but I don't want to, here's the other option. I'll sell my house. I have a lot of equity. I'll sell it. I'll have the money. I'll pay off debts. I'll buy a new house, whatever you're going to do. But many seniors, 55 and older, that's still young. They don't want to sell their house. This is their home. I know me, Kirk and I are like, we want to be here, back in the backyard with Tucker once we're done. No, I'm kidding. Tucker's the dog. So just so you know, don't be worried. Don't be worried.
Okay.
A graveyard in the back. No, I'm kidding. But so if you want to stay in your home for the rest of your life, that's your intent. But you've got all this, so many of us, I'm 55 and older, so many of us have a lot of our net worth tied up in that house. Mm-hmm. So how do I access those funds for whatever I want to do? But I don't want to take on another debt because now I got to write a check every month for that.
Yes.
Okay. So a reverse mortgage, the way that works is it works in reverse. So we're going to give you a new loan and you can have the money now. There's a variety of ways to receive the monies, but you have no monthly payments for the rest of your life. Now you could make payments if you wanted to. You could, but you don't need to. Okay. So what happens if you think about it, on a regular mortgage, you're making a payment every month, so your balance goes down. On a reverse mortgage, you're not making a payment, so the balance goes up.
Okay. All
right. So when you pass away or you decide in the future you do want to sell, when you move out of it being your primary residence, then you, just like any other sale, you would sell the home and whatever the balance was on the mortgage would get paid off.
Yeah.
So that's what a reverse mortgage is. It gives so much more freedom to seniors to do certain things. For example, you could get a reverse mortgage and build, with the monies, you could build an ADU on your property and increase either have multi-generational living, so you have their adult kids living with you, or you move into the ADU and your family can live in the big house. So there's one way. You could say, I really just need about $1,500 a month extra to help me pay my bills every month. We could set that up where you get every month another deposit. You got your Social Security, you got your little pension, and then you got your whatever, $1,500 a month to help you with your regular living expenses. In the case that I had mentioned to you, I have someone that wanted to give her kids the gift of home purchase now, instead of waiting until you pass away and now they get your estate and you're not even there for them to say thank you,
Yeah.
Is there a way to give part of your estate to your kids now where it doesn't kind of impede upon your retirement plans? And so I have a client who had a lot of equity in their home. They wanted to take $250,000 out and double down. They gave $125,000 to each one of their adult kids. Mm-hmm. And now their adult kids have a nice size down payment to buy their first home.
Yeah.
And then that person, the $250,000, there's no payments on that. It's in the house. Now, once you pass, and you would have given it to them anyway. So why not? It doesn't work for everybody. I get that. Every family has dynamics that, but for this person, it was such a good solution, and she was really happy to be able to help her kids now.
Yeah.
While she's still around, and help her kids, because one of them was about to have a baby, and she's like, I want them to have a home and, not be in an apartment complex. Like, how can I make this happen? Mm-hmm. And so, that's how reverse mortgages can work for you. And but the downside, I guess, if you want to call it a downside, is just that a lot of people have some false narratives about what a reverse mortgage is and what it does. And that's based on some truths in the past. So honestly, they've changed quite a bit, reverse mortgages. I've been, in one way or another, involved with reverse mortgages pretty much my whole career. Now I'm a reverse mortgage specialist here in North County, so I do quite a bit of work with seniors, but in the past, we didn't do quite as much, I guess I would call it due diligence, to make sure it's a good match. And so we didn't necessarily, there's no monthly payments, right? Yeah. So we didn't really look at a financial assessment. We didn't used to. But guess what? Seniors still do have to pay property taxes. They still do have to pay homeowners insurance. They still do have to eat and turn on their electric.
Yeah.
So we needed to make sure we're looking at those things to make sure if we're going to give them the reverse mortgage, they're still going to have an ability to maintain the property. Okay. So we do that now. There's other pieces to the puzzle where, like I said, you've got a lot of equity. So we're only going to tap a portion of that. We're not going to go, okay, your house is worth $1 million, so we're going to give you $1 million. That's not even how it works. There's just, depending on your age, maybe you might have 40%. So if you own your home free and clear, and the house was worth $1 million, then maybe we could get up to 400,000. So it's you're still holding out a lot of equity for future and for your heirs and that type of thing.
In case like you have to sell.
Yes.
And then how the interest, it's the interest that would go up?
Yes. So what's going to happen is, in that example, if we had a $400,000 starting balance each month, it would go up a little bit because you're not making payments on the interest that's accruing.
Yeah.
But interesting to note that obviously, as you know, housing prices typically go up as well.
Yes.
So just because we started with your value at $1 million today, and then you pass away in 20 years, I don't know, your house probably won't be worth $1 million anymore. It'll be worth more. So even though your balance is going up, your value is typically going up as well.
I think that's a super cool story with your client being able to help her kids purchase their first home, because we were talking about like what our average house right now is. Average, was it 900,000 the last time I checked?
Yeah, median home price in our county is, well, you know, it's a little bit different for North County versus San Luis and whatever. But yeah, you're really talking about 900,000.
Yeah.
Yeah, depending on exactly where in the county you're buying. So for people to get in, it is tough. First time home buyers. And if you can, you know, gift in your lifetime the opportunity for your kids to get in, then that's, you know, I don't want to say you've done your job. I mean, a lot of people, again, every family has a different dynamic about it, but it's just a great way to help people do that as well.
Yeah, and then being able to see that.
Yes.
You're right. When you said that, I'm like, oh, that's right. Like, I would love for it eventually, you know, when I get old, like, to see that my kid has a house.
Are you saying 55 is old?
I knew that was coming. You know, when I'm like 670.
Yeah.
I don't know.
Yes. So whether it's to invest and help your kids gifting, or whether it's, you know, hey, prices of everything have gone up, everything from the grocery store to the gasoline to electric bills to homeowners insurance.
Yeah.
So now, even though you've had a great financial retirement plan, it's possible that you still might need more help, and you don't want to sell your house. Something that's really cool, we didn't even chat about this at all, and it's kind of like, you know, but people can use their reverse mortgage to purchase a home.
Like a secondary.
No, like their new primary residence. So I'm going to give you an example of how it worked really well. So I had some clients that seniors lived out in the country, had whatever, 5-10 acres, I can't remember now, and it just got too much for them. I mean, he had some health issues, Vietnam War veteran, and they need to get out of that situation he just couldn't take care of the property as much anymore. So what they wanted to do was create planning strategy. If we move out of this house and we have this much money, and we take all of that money, I think they were going to net about like $600,000, and we use all of it to buy something, that didn't really help us with our nest egg. There's nothing left over, right? And then in addition to that, at $600,000, we weren't finding the houses they wanted to buy. And they really wanted to make a plan that they wanted to set aside some of that money in case he needed long-term care. Strategy, planning ahead. What's our future going to look like? And so what you can do with a reverse mortgage for purchase is you could say, so for example, I'm now buying a house for $800,000. Okay. The reverse mortgage, again, it depends on your age, but let's say it gave you 40% of that. So 800,000, 40%. So the reverse mortgage might give you 320,000 for that. So what you're coming in with is the remainder. So we were able to segment out some of their net proceeds, not use all of it for the house purchase. So they sold their house in the country, took the net proceeds, and was able to bank some of those monies to save for future needs, healthcare needs, and buy the house they really wanted, which was in in the traditions, in 55 and older. So it's such a great tool, and you just really need to, sit with someone that knows about reverse mortgages. And again, so much has changed with the rules as lenders, as well as guidelines, to really make sure that they're super safe for seniors.
That way they don't get into like a financial crisis at the end.
Exactly right.
Okay.
Exactly right. They're a great tool.
Okay.
Yeah.
This is good. I never heard of it, so I'm happy that you shared that with me.
Yeah, and my job is to educate. I never try to, sell. Like I said, every family's different.
Yeah.
So I just want to make sure you know what's possible and what your life could be like this. And here's the pluses, here's the minuses. Let's talk about it. And if it's a good match, I'm here to help. Part of the reverse mortgage process does include a third-party counseling session, so it's not just me you're talking to, but you'll actually have more information from yet another person through that's approved through Housing and Urban Development. It's a HUD-approved counselor. So you have lots of input to make sure you're making the best decision for you. But it's definitely something I really encourage seniors to at least explore.
Yeah, and it's also trusting your lender, like being very straightforward.
Yeah.
You're being straightforward. It's like, hey, it's not for everybody.
Yeah.
But it might be good for you.
Yes.
So it's knowing that you're going to tell them up front.
Yes.
Like, this is what you get.
Yep, exactly.
Yeah, no hidden messages here.
Exactly. And it's always, I think you know this, but in case, it's always at no cost. So these, when we sit down and talk with people, there's not a bill. It's not like I'm an attorney where you're going to get, because you spent 15 minutes with me or an hour, now you got to pay me. It just doesn't work that way in our business. So I'm more than happy to sit down. There's no obligation, just kind of chat about it.
Yeah. So you specialize in a few things, right? So that's one of them. And you also specialize in VA loans.
Yes.
And I don't know if a lot of people know this, but if someone's out there looking for a VA loan, not every lender is specialized in that. So you have to be right.
Yes. Yeah. VA home loans, first of all, locally, not every credit union or bank is offering them. So that's, a true statement. But when you work with veterans, there are lots of ins and outs in that loan program that are unique and separate than other loan programs. Okay. And so someone who does a lot of VA home loans like I've done in the past, I can really help kind of navigate that system because just because you're working with a veteran, not every veteran knows about the VA home loan benefit and how it works or even that it exists, right? So, for me, it kind of just goes back to how I told you I kind of started my business. It's just, I always end up, wanting to work with people that are good people that deserve great experiences.
Yeah.
And veterans are some of the best, obviously. From my personal perspective, why I really dedicate part of my business to veterans is that just about every man in my family has served. So my dad, my brother, my nephew, my cousin, even grandparents back in the day. So that, and I've had, I guess I would just say personal experience in their dedication, the discipline, and the commitment, and also, what it does to families and that type of thing. And I just really feel like those who have served deserve to be served well.
Yeah.
And so if you want to sit down and talk about how it works, you want to be with someone that knows how to work VA home loans. Mm-hmm. Yeah. They're a huge benefit because they do offer 100% financing, so no down payment necessary. And then depending on your status with the VA, it could be that you don't have it's called a funding fee, so that could be waived. And then on VA home loans, the VA is guaranteeing the loan, so there's no monthly mortgage insurance, though. So better benefit to the veteran as well. So one of the best loan programs available out there for those that have served. So, I really feel for veterans. And like I said, I've had personal experience watching through my own family members. And I just think we should pay a little more attention and give them a little more props than we do.
Yes. Yeah. It's a way to pay forward, right?
Yes. Absolutely.
Yes. No, that's, I've been working with somebody who has a VA loan too. Yeah. And I'm like, this is
they deserve
awesome.
it.
They do. Definitely.
Yeah.
Definitely. On the side note.
Yes. What's happening next?
I know you've heard about this, and I've already gotten a call.
Okay.
50-year
Yes.
mortgage that they're looking to possibly do.
Yeah, 50 years. You know what I did? Oh, I'll send it to you. I don't know if you've seen anybody do this yet, but there's within my lending world, there's like all these threads, and people are going on to ChatGPT and saying, here's my headshot. Create a picture of me when I'm 50 years from now.
No,
yes,
really?
oh my God, my picture's so gross. My picture's so gross. I'm like, okay, really, I'm going to be dead in 50 years. But let me show you what I'm going to look like.
I want to see it.
It's so disgusting. Anyways, it's hilarious because it's ChatGPT. It takes my whole headshot, like my dress that I had on and everything, my same hair.
Just 50 years from now.
Oh my God, it's 50 years. It's disgusting. Anyways, I'm pretty leathery. Just so you know.
Oh,
but anyways, so 50 years. So first of all, important to note that it's not real right now.
Right.
It's something just was floated up and it's clickbait. Let's click on that. What's a 50-year mortgage? And lots of people are talking about it. Whether it comes to fruition or not is hard to say. It may never become real.
Yeah.
Okay. But what we are anticipating, if it were to become real, is that the rates would be a little higher than a 30-year because if you think about it, that's a investment, an investor's commitment to probably you wouldn't pay on it for 50 years, but maybe you would. So what kind of rate would we even anticipate for 50 years would make it worth it for the investor part of it to make it make sense, right? So we're anticipating the rate to be slightly higher than a 30-year, okay? That would be a guess. So what happens is over time, the bad news to a 50-year mortgage is if you did pay for 50 years and paid it off, you would pay a lot more interest over that time than you would a 30-year.
Yes.
Okay, that's just the reality. But my point is, I'm not totally against them because the average today, people are holding their loans is 12 years, but it used to be 5 to 7 years.
Okay.
So if you think times, things come and go, maybe an average is 8 or 9 years. Okay. So we're not paying on it for 50 years. Mm-hmm. You either sell and move and you paid off the loan, or you refinanced it, or you got cashed out, and whatever. So it's not 50 years you're really looking at for how much interest you're paying. And then the other piece is, even though the interest rate might be slightly higher, maybe that 50-year amortization gets you into a monthly payment that makes more sense for you right now, either because you qualify with this payment, or even if you could qualify for a 30-year payment, it's not comfortable. And so things like we're starting a family. My wife's going to be out of work for 6 months to a year, longer. She wants to stay home. We might be going to a one-income family. We're getting done with our schooling. We're going to have a huge raise once we get our master's degree, but right now we don't have that money. So the reasons might make sense for you to start with a 50 years so that the payment's much lower in these first years until you either refinance into a better term, or you sell the house in the future and pay it off and get another 30-year then, or even a 20 or 15-year if you're in that financial position. So I don't think that 50-year mortgages are inherently bad, but just like everything we talked about today, it is going to be unique to that person. And just to kind of talk through the ins and outs of it, the pluses and minuses, and make sure that you're getting the best loan that matches your needs.
Yeah, like there's some negative to it, but there's some positive to it too.
Yeah,
so
absolutely.
Yeah. And
I mean, if it can here's the other thing, whether you're comfortable, if it can get you into home ownership, I'm all about it.
Yeah. Sometimes it's that extra like $300 that we need. That you're like, I'm sorry, you're just like this close.
I know. Yeah. And so but here's the difference. As you know, I mean, okay, we can't afford it. We don't qualify, so we're going to continue to rent. Well, around here, same thing, super pricey. Yes. You're going to be $2,500, $3,000 every single month out the door, and you're paying off someone else's mortgage. You're creating someone else's net worth over time. You are 100% interest rate because none of it's going towards you. It's all going towards rent. So it is a jump a lot of times from someone going from renting to buying. But really, it just is long-term as well as short-term, a great opportunity for most people to get into home ownership.
Yeah, no, this is good because I think a lot of I've talked to a few people and it was all negative, and I'm like, oh, I could see that potentially being a positive thing.
Yes.
So
Yeah.
hopefully it goes through. Why not? I mean,
Right.
just give somebody else another
One more loan product.
Another option.
Let's talk about it. Let's look at it and see if it makes sense.
Yeah. Oftentimes, almost all the time, the first thing they ask is, what are interest rates today?
Yes.
So what are they today?
Yeah. Interest rates today, I mean, I will tell you the short answer that everybody wants, but I'm going to tell you, I'm going to follow up with a longer one.
Mm-hmm.
Okay.
Mm-hmm.
So 30-year fixed rates today, right around 6.375.
Okay.
So the longer answer that nobody wants to hear, but I have to share, is that interest rates are so specific to the individual.
Mm-hmm.
Okay. So here are some, if you asked me, you came to me and said, Zoe, where are rates today? And I wanted to be super accurate, which I always do. Mm-hmm. Some people don't want the accuracy, but I'm accurate. I don't like to, sell smoke and mirrors. I want to tell you exactly what it is. So if I wanted to be super accurate, I would have to ask you, is it going to be your primary residence, a second home, or a rental property? How much is the purchase price? How much are you going to put down? Do you want to have your taxes and insurance included in the payment? Are you a first-time home buyer? What's your income? Is it units, 1 or 2 units? Is it a condo, a PUD, or a single-family residence, or manufactured home? I don't know. That would probably get me started, right? So all of those things, believe it or not, can affect your rate.
Yeah.
What type of documentation? I mean, I don't even know that at the beginning, right? Are we going to do a bank statement loan? Mm-hmm. Are we going to do, another, out of the box type of loan? Those change your rate a little bit too. So my whole thing, and then the third thing, or whatever, 12th thing about rates is many lenders you'll see online, or even someone that you're talking to will say, the rate is 5.99. And you'll go, Zoe, your rate is 6.375. How come yours is so much higher? What they haven't necessarily shared with you with full detail is that costs money, discount points, to get that rate. Okay. Mm-hmm. Now I can do that too, and that's fine, but I want to be able to share with my clients all your options. So when I roll out a rate, it is typically, for full transparency and communication, I say, this is no points. You're not getting charged to get this rate. Mm-hmm. And some people will say, well, what if we did pay 1 point equals 1% of your loan amount? So if your loan amount is $500,000, then 1 point would be $5,000. Added to your closing costs. Okay. All right. So Zoe, if we paid 1 point, what would our rate be? Maybe it would be 5.99 if we, it may be dropped from 6.375. So then you get into, you want to work with someone that can say, does that make sense? Mm-hmm. Should we pay this much upfront now in today's market, given the environment and what we plan for 2026? Does it make sense for us to pay this extra now? To save how much money a month? How long would we have to hold this loan for that to make sense? If I'm paying $5,000 to get this new rate, but the difference is $200 a month, I'd have to kind of hold that loan for a little bit for it to make sense. Yeah. Right? To pay that extra.
That $5,000.
Yeah. So that's the other piece about rates is you can get as low as you want at a cost. Yeah. So now I will just kind of dovetail that with what I'm seeing in the market, and maybe you're seeing this on the real estate side more as well. The market's kind of softened just a little bit. Certain properties are staying on the market a little longer, more price reductions. It's not like we're not diving. Don't wait for the dive. It's not happening. Yeah. It's not going to crash, but it's a little softer. And people that are trying to sell, they want to sell. Obviously, why did they list their property? Yeah. And so they're a little bit more open. Not always, but a lot of times to negotiations. Mm-hmm. And so what I've been successful with my clients and teaming up with the agent, of course, their buyer's agent, is what if we put in an offer at list price or close to list price, but we negotiated a credit. Yes. And what that does, a seller credit can be used towards closing costs. So if we're short on down payment and closing, that can help with that. But what we're really using it for as well is to be able to buy down that rate. Yeah. So what I've, like I said, okay, if we have $5,000 on that example, we can maybe ask the seller to pay for that, and you, buyer, get the benefit of the lower rate permanently for forever, as long as you want to hold that loan. But the seller paid for it through a credit at closing. So rates are a big topic, and there's so many ins and outs, and no one wants to hear all the story. And they were like, why do you have to know all this to give me a rate? I'm like, well, do you want it to be accurate or not? Yeah. I can tell you the average, but that doesn't mean your story is average.
Yeah, I have 2 escrows right now, and both of them have totally different. One's like 5.7, and the other one's like 6.7, actually.
Yes, so see, they could be a full point or more difference depending on credit score. Oh, I didn't even ask credit score. That was another one. So many different factors to get an accurate rate quote. The lender really needs to know quite a bit of information.
Yeah. And on both, actually, we negotiated their closing costs on both.
See?
Yeah, because of what the market's doing. It's like...
Right.
Yeah.
So think about it. If someone's... Right now, we're, in November... if someone's selling and listed their property right now, we're going into the holidays. Nobody wants to show their house around during the holidays. Like, why? And the reason would be because they have a reason. They got to go. You know, somebody died. Somebody is getting a divorce. Somebody's relocating out of state, retiring. It's a estate sale. The kids are, selling the house. These are all reasons that people want to sell right now. Okay. So if they've got that motivation, in one example, I just closed with a first-time home buyer. The people had already moved out of the home. They were living in another state, and what's marching up in next month in December? Property taxes are due. They're like, okay, this is an empty house. Our property taxes are going to be due. We don't want to own it anymore. What do we have to do to get this place sold? There's a limit clearly, but they're many times much more agreeable to being flexible with negotiations. Yeah,
exactly.
So you're seeing it too.
Yeah, and then it's also like maybe offer, a lot of times they want to offer less on the purchase price. And I'm like, how about, we can offer close to asking price, and then we can, get your closing costs covered, which closing cost is...
Yeah, that could be significant.
Yeah.
And when I do the side-by-side comparison, honestly, with negotiating on price and negotiating with seller credit, the same number. Like you go in and I'm going to offer $50,000 less than the list price. Now, you wouldn't necessarily get $50,000 on a credit, but you could. But if you did the exact same comparison, assuming that a seller would agree to either, let's use $25,000, that's a little easier. $25,000, the seller would have agreed to sell it to you for $25,000 less. Let's assume they would have. Let's say you go in at the list price, though, and you say, I want $25,000 in a seller credit. It's the same thing to the seller. The seller's agreeing to take $25,000 less. But for you, the buyer, negotiating on the price changed your payment by about $120 a month. Negotiating with $25,000 in a seller credit could change your payment by $300 or $400 a month. Significantly better, because we can buy that rate down much farther.
Yeah. Yeah. So that's another thing, being creative and
exactly which one's best for you.
Yeah. This is awesome because we're getting to the end of the year, and so anybody who's potentially looking to purchase a home in the next year, this is really good information.
Yeah, if that's on your wish list for 2026, Happy New Year. Let's set our goals. Let's put them in writing. Let's make a plan. That is one of the best things you can do for yourself, right now, is to put that on your radar and talk with me, talk with Val, and see how you can make it happen.
Yeah, just get, I think I texted somebody this because somebody was a friend of mine went and he's like, I'm going to the gym, and I'm like, way to go, like start it now. By the time New Year comes, you've already vetted yourself.
Yes.
And now it's like a habit. So same with starting trying to get your pre-approval, or even doing the Dream for All, like trying to get into that. It's always good to just start now rather than waiting.
Absolutely. Because like I said, sometimes it takes a while and there's some steps that we have to do together. And with that, starting, you just got to start.
Yeah.
Take that first step. That's all it is.
Don't wait till the new year. Just start it now.
Start it now.
Anything else that you think we missed? I think we covered a lot of good topics.
Yeah, there is. I guess the main thing that I like to share is that whether you've, sat with somebody in the past and it didn't work out well as far as lending, or you've had experiences that kind of lead you to believe I'm never going to become a homeowner. It's always a good idea to just revisit, talk about it. And then we're talking about a lot of, how to get in and first time home buyer stuff. But a lot of people want to move up and on, right? Like they already bought their first time home buyer house 5 years ago. How do we move up?
Yeah.
How do we do that? And how do we do two things at one time? Do we have to sell our current home to buy the next home? Not necessarily. I do that all the time. Buy now and sell later. So there is so much opportunity to at least review options in terms of what loan programs are out there to make it happen. And then we put it all in writing and, you compare, you've got a strategy, you've got options. But the bottom line is, I almost always use the puzzle metaphor where you're like, okay, it's all puzzle pieces. If you don't have all the puzzle pieces, you can't see the picture.
Yeah.
And you really need to know, well, what would that rate be to do that? And what would I have to do with my retirement account if I did that? How much would I have to sell my house for to do that? If you have all of that together, then you have what I call clarity.
Yes.
And if you're clear, then you can make a good decision. Mm-hmm. And that might mean moving now. It might mean, no, we're not ready now, but now we have a plan and we know what's going on and what we need to do. Mm-hmm. But you can't make any of those decisions without clarity. And so just, sitting down with someone you trust and having clarity on what your options are and strategies, sometimes getting creative, work with someone that knows how to do that, work with people, whether it's out of the box kind of type things, but these are all very well-rounded and good types of loans. So I don't mean to say out of the box is something, creative sometimes leads people to believe it's kind of funny on the side. Yeah. It's not that at all. It's just looking at your financial picture in a different way and seeing what options are available that meet your needs.
Yeah, coming up with a plan. And we're always here to help. Even if, I'm not the preferred agent, you're not the preferred lender, trust, agents and lenders, most of us are willing to help. And so we don't mind having an hour-long conversation. Now we kind of enjoy it. That's probably one of the things we enjoy about our jobs.
Yeah,
is meeting people.
Yeah, I love chatting with people, and absolutely, it doesn't mean if you just need an extra set of eyes on anything, even if it's a rate check. Hey, I already with this other lender, but I'm not quite sure if this is a valid rate. Whatever. We stake our business. I mean, I've been in the Paso Robles area doing this for more than 20 years. I stake my business on reputation and referrals. And for us to be able to get reputation and referrals, we like to talk to people and introduce ourselves. So, and it doesn't always equate to business right now. That's okay. Yeah. I just want to make sure that people have good information.
Yeah. And then just one more thing, referring back to local, it's like your office is on Spring Street.
Yes.
They can come by, they can sign DocuSign. Instead of doing DocuSign, which I've had clients like that, will not do DocuSigns.
Yeah.
So you're providing a space for people who don't necessarily want to use technology.
Yeah, so absolutely. I print out documents quite often to hand sign. But that's the convenience factor. But I really think I have a lot of clients that don't want to apply online.
Yes.
Not comfortable with that. I have clients that just really, and honestly, this is the business I like, so it's a good match for me, that want to sit with someone face to face and be able to just pop in the office and say, hey, I have that extra pay stub. Can I just give it to you? Instead of trying to take a picture of it with your phone and upload it to a portal. And I mean, obviously I've got all those bells and whistles technology-wise at Certainty, but not everybody wants to work that way. Yeah. So to have a local office, a brick and mortar, you can walk in and come visit, chat, talk about it, ask questions, drop off paperwork, sign paperwork, whatever. I have always had that here in our county. And that's the kind of business I enjoy. And I feel like many clients in our community enjoy that business as well.
I love it. Yeah. I have people, sometimes I'll step out of the office and then Mario, he'll text me. He's like, your client's here, just stopping by to say hi. And I'm like, I love it. I'm on my way. And so it's just cool. We're just like, hey, have a cup of coffee. Let's just chat for 10 minutes or so.
Yes, exactly. So cool. Human, especially after COVID, don't you think human interaction and connection has kind of been, thwarted, if you want to call it. We got so used to only doing things by, the screen, which again, great tools, no problem. It's fine. But not everybody wants to work that way. And I really enjoy just sitting down and chatting in person. Like now.
I know. I love that too. Yes. And it's a little break for me. It's like, oh, yes, please. I'm stuck on laptop for like an hour or two. So this is great.
Yeah.
Yeah.
Absolutely.
Well, thank you so much, Zoe.
Thank you, Val, for having me.
Yes.
I appreciate it. Have me back anytime. When the Dream for All rolls out, I'll keep you posted on the updates and all that kind of good stuff.
Yeah. And then how can people reach you?
My best contact is 805-400-8585.
Okay.
That's my phone number. And my email is way too long, but I will tell you it. Zoe.Raithel@certaintyhomelending.com. But best is phone or same for text, 805-400-8585.
Awesome. Yay. Thank you.